Hey everybody, welcome back to the channel. We've got a brand new report from Mariana Perez, one of the analysts covering Palantir from Bank of America. She believed in Palantir when it was at $6. She's been constantly covering the company. She upgraded the company from $13 to $18. I believe 2-3 months ago that upgrade came. She has just come out with a new report after Q2 earnings, so about a month after. She's been able to condense it, understand it, and she is maintaining her $18 price target on Palantir. Now, this video is going to be, I would say, decently long. We're probably gonna get to 20 minutes. I highlighted some key parts of the report that I want to talk about and go in depth on. So if you're listening to this video, sit back, get some coffee, some popcorn, whatever, put it in the background. I will be reading parts of the report that I think were important and then giving my analysis on some parts of the report and some things she brought up that are really interesting to think about in the context of Palantir, especially around commercial growth, government growth, international growth, all that stuff. And ultimately why I think it makes sense for her to maintain this $18 price target. The good thing is, even though we have 13% revenue growth year over year, which is not the best for a high growth tech company, she did not downgrade the stock. And that means there were enough catalysts within the earnings. There is enough future growth she sees in terms of the trajectory for the company to be able to maintain the price target she has on the on the stock. If you want the report, DM me on Twitter. Links in the description. On Twitter, just message me with your email. You don't have to send anything else. Just send me your email. I'm sending out the report. I already sent out like 100 of them this morning. If you want the full PDF to read through the whole thing, 18 pages, DM me on Twitter and I will send you the report with your email. Now, real quick before I get into it, the stock. So stock's up 5% right now. It was even higher than 1533. The reason the stock is up is not really because of the report. It's because the JOLTS report came out today, the U.S. banking, U.S. job opening reports. And essentially, we have 8.57 million jobs open. We expected 9.8 million jobs open. So a little bit around 1 million jobs are not on the market anymore, which is really good for the Fed, because if there's only 8 million jobs open and we expected 9 million jobs to be open, that means 1 million jobs are not open anymore, which means either those companies fill those roles or they're not offering those roles, which means less people getting jobs, less people making money, less wage price inflation in terms of pressuring overall inflation, less money going out into the economy, better for fighting inflation. So at the end of the day, all stocks are up today. Market's very, very green because of the fact that if the job openings are down, then that means more likely than not, we are going to see some potential benefits to overall inflation coming down because there's just not that much spending going on to the economy. All right. Here we go. Let's get into it. Palantir, enabling secure and compliant AI. Bank of America reiterates their buy and maintain rating at an $18 price target. The price when they published the report was $14.60. So let's get into it. A couple key things that I highlighted in yellow. So first of all, they're enabler of an AI implementation. They say, despite some recent pullback in the AI market sentiment, we continue to see Palantir as a key player in the generative AI market. Palantir is in a unique position as an enabler of secure and compliant generative AI implementation to both commercial and government organizations. This is basically what they said a couple weeks ago when they put out the original price target from 13 to 18. We think Palantir's ability to provide Gen AI solutions agnostic to a preferred LLM, compliant to tight security requirements with a demonstrated use case cross-sector has not been fully appreciated by the market. We reiterate our buy target. That is the arbitrage in terms of the market opportunity. Obviously, it's not been fully appreciated because 13% year-over-year growth is not good. However, I mean, me and Arnie have been talking about this a lot on Palantir Weekly, that revenue growth that is small right now is okay if you think there is massive revenue growth in the future. And the market doesn't understand how that revenue growth is coming, where there is the arbitrage in terms of being able to have the opportunity, right? The lack of understanding of the market is the opportunity for the investor. The question becomes, will Palantir be able to execute on securing LLMs compliant within requirements in organizations? I believe that's going to be the case. Bank of America believes that's the case, and that's why the buy rating and the price target is still $18. Okay, AIP demand. In our view, Palantir's recently released AIP is the #1 catalyst for company growth. AIP caters to accelerated demand for compliant, secure, and reliable data infrastructure and organizations' digital twins. Demand stems from both new customers as well as expansion contracts with existing customers. Then they talk about why LLMs are important. Now, on to their government USG support. One of the top commercial opportunities, we remain confident in Palantir's position to the growing U.S. DoD modernization efforts. We are encouraged by the recent U.S. Air Force non-competitive awards that show Palantir's technical advantage to support key Department of Defense priorities like Joint All-Domain Command and Control. Additionally, new partnerships with government services continues to spread the reach of Palantir's products. When they're talking about non-competitive awards, they're talking about the sole source ways that Palantir got those contracts. They single source means you have competition with other companies. Sole source means you're the only competitor which means you're the sole source for the contracts. And Palantir got 3 awards at about $118 million back in June because there was no competition. So it seems like Bank of America is bullish on their ability to grow in the United States. Couple catalysts ahead: UK NHS and possible S&P 500 inclusion. We are keeping an eye on 2 near-term catalysts. The 5-year £360 million UK National Health Service data procurement contract is expected to be awarded on September 28th. And second, if Palantir prints another GAAP profitable quarter in 3Q 2023, which I think is all but a given, the company becomes eligible to be a member of the S&P 500 index. We think that becoming a member could attract more institutional investors and thus reduce volatility. It doesn't mean the stock's going to go to the moon. It just means that when you have other institutional investors protecting the stock because, they have an interest to keep it up because they bought it, you have less kind of crazy volatile price swings that are happening in the context of Palantir. Okay, let's go to some other stuff. So, 100 plus users on the platform seeing demand for new and existing customers. So it seems like they are excited about AIP. They say, let me just zoom out a little bit. Here we go. Management remain confident in the strong demand for this generational opportunity. Palantir currently has 100 companies using the platform with an additional 300 in the pipeline. We are encouraged by the strong customer interest seen in the 10 weeks since the platform's launch. Additionally, we look favorably on management's commentary, noting that demand stems from both new customers as well as existing customers utilizing other Palantir platforms. Again, this is important because if you already have a customer using Foundry, they already have an ontology of their data. They already know how they can work within their data. If you listen to the recent Twitter Spaces I had with CodeStrap that I also posted on YouTube on Friday, his entire argument was AIP is useless, or LLMs are useless more broadly, if you don't have an ontology, if you don't have an understanding of your data. So if you have clients that already have Foundry and they're some of the biggest companies in the world and they're competing with other competitors for the generative AI arms race, Palantir's AIP is a no-brainer if you already have an ontology of your data because it works seamlessly with Foundry. So I think the upselling, remember, the $533 million we did last quarter, I was about to say last semester, like I'm going back to college, last quarter, none of that is AIP. $233 million was commercial, $300 million was government, and all the commercial was Foundry, Apollo, and Gotham's probably government. So Foundry and Apollo. None of it was AIP. So there is a lot of revenue growth, hopefully, if we can monetize the existing customers and new ones just on AIP. The company has not shared information with regard to pricing yet, but our sense is that pricing will likely be on a customer-to-customer basis. This is probably correct. Management did note, however, the disciplined cost approach to monetization should not impact margins, which should be a good thing for Palantir, obviously having 80% gross margins on their software. Okay, they talked about buybacks. So at the end of the quarter, Palantir announced a $1 billion share repurchase program in its first buyback since the company's DPO. In comparison to Palantir's software infrastructure peers, its share repurchases, representing 3% of the market cap if they were to buy, are largely in line with the low to mid area of the range. So you can look at it here. Palantir share repurchases are largely in line with the other lower end of the peer group range, and we have Snowflake, Oracle, Microsoft, all of these guys. So seems to be kind of in the range that they should be in. Now, here's where we get into U.S. commercial momentum and what it means for a weaker European international commercial growth. While commercial revenue was up 10% year over year, a significant portion of double-digit growth was bolstered by strong domestic commercial revenues. I believe it was like 37% year over year. Management noted Europe sales were softer due to headwinds from macro trends, including significant cost-cutting activity in the region and customers utilizing in-house development models, which is obviously not good for Palantir that's trying to sell them their proprietary software. Despite the weaker quarter, we were encouraged by management's commentary surrounding AIP driving conversations of expanding work with existing customers. We expect momentum in the U.S. commercial to continue while keeping an eye on European customers that still represent more than a third of Palantir's commercial revenue. European revenue sucks for Palantir in the context of commercial growth. If they can figure that out, and maybe figuring that out is just a question of macro getting better, so that might take 12 to 18 months, that may be another tailwind when it comes to growth on the commercial side, because U.S. commercial is killing it. But if international commercial could kill it with U.S. commercial, and we know that there's a massive market internationally for Palantir software, then that would be really good for the growth. Despite pressure from EU macros, commercial SPAC revenues grew $53 million in one half 2023, or 13% year over year. Almost 70% of the increase is related to higher revenues from existing customers. This is when, we were able to get Lilium to pay us $50 million, $10 million per year for 5 years versus the average $2.9 million we're getting from customers, but that's only because we were able to do that in 2020. Trailing 12 months revenue per existing commercial client has increased 4% year to date from 3.3 million or to 3.3 million from 3.2 million. I think Karp said said we're getting 2.9 million for every commercial customer on the earnings call. It's actually 3.3 if you do the math, as Mariana has done, but basically the same. We are encouraged by further growth opportunities in the commercial side of the business. In 2Q 2023, Palantir experienced 93% year-over-year growth in healthcare revenues and 129% year-over-year growth in transportation. I did not know that. I'm assuming they went deeper into the 10K or 10Q to be able to figure that out. So that's new information to me, and that's why these reports are so interesting, because I did not know that they grew 93% year over year just in healthcare. Healthcare, transportation, supply chain, energy, I think those are 4 of the big verticals that are going to be big for Palantir. As AIP continues to grow and mature, we expect to see additional expansion contracts for AIP services, locking in additional revenue from existing customers, particularly in the US. Then they say here, although 2023 customers have only contributed $22 million year to date, we see significant revenue from expansion with those early stage customers. So again, this idea that if you already have Foundry, you're likely going to be able to adopt more software from Palantir. If the average per customer revenue contributed by the 42 commercial customers added in 2023 goes to the level of existing customers, so to 3.3 million from 1.27 million, expansion within the early stage customers implies $85 million in incremental revenues in the next 12 months, or 10% growth in commercial revenues, which makes a lot of sense. So basically, I think we added 31 customers, 8.5% year-over-year growth last quarter. That plus the customers we added in the previous quarter, which equals 42 in total. If we're able to get them to the same level of monetization, basically ARPU, of 3.3 million versus the 1.27 million, that should imply $85 million in incremental revenues year over year over the next 12 months, which should give us 10% growth in commercial revenues. And so that's just the question of being able to monetize them, give them the tools they need, and potentially upsell them on the services that they should be able to buy in the future. Okay, then we have some charts right here. Again, you can see that if you get the full report, I'll probably be tweeting them out. A couple other things. De-risked ownership, value of SPAC equity securities down to 16.5 million. So Amir, my good friend on Twitter, he kind of did the math and kind of figured this out before the big guys came out with this report. But Bank of America is also noticing how Palantir has been able to de-risk their exposure to speculative companies like SPACs. Palantir's 2Q 2023 holdings show they only own equity in 5 strategic partnership companies, down from 19 in fourth quarter 2022. The market value of publicly traded equity securities is down to 16 million, as it was in 35 million in 4Q 2022. Net unrealized losses from equity securities held was 7 million. This suggests Palantir sold publicly traded equities and realized losses of 48 million year to date. We are estimating a $2.6 million headwind to 3Q 2023 earnings on quarter of data depreciation of Palantir's holdings as of 2Q 2023. Basically, Palantir hasn't counted the sort of negative losses they're going to have to realize based on the fact that they sold some of these equities. So overall, they're up 12.5% on equities. They're at like 290 million versus 259 million they invested back in 2020, but they did have to realize some losses, and that will be a headwind going into 3Q 2023. I'm assuming Palantir is going to be able to balance that off so they are able to hit their guidance with either net interest income or anything else they're going to have to be able to do to get to the number that they expect to be able to get. Okay, let's go further down here. So again, this starts about the strong U.S. government pipeline. This is basically what I was talking about in terms of sole source contracts. So they didn't really have any competition. In January or in June, they got $118 million. So it goes kind of deeper into why they got these contracts and why these contracts are important. Partnerships with Carasoft and SpectreOps. This is companies that basically allow them to expand their federal government offering, whether it's to startups or whether it's repackaging it to other governmental agencies and institutions. So basically different sales distribution partners that Palantir has to be able to get there. Then we get here, the NHS. I will have an update video on this soon this week, but this is going to be the Big Daddy award that we either get or we don't get. And this is going to, be a major tailwind for the stock if we're able to get it, or at least for the company, not the stock. International government revenues outperformed in the quarter, but they have some time to catch up to delayed recognition from first quarter 2023. They should stay in line with midpoint for the remainder of the year. The next key catalyst for government international exposure is the upcoming decision in the UK's National Health Service data procurement contract. Management is confident about Palantir's offering, and we think an award in Palantir's favor could also unlock more international healthcare opportunities. My argument has been constantly, forget the money. Managing an entire country's healthcare system, or even part of it, based on however much of this deal we get, is going to be insane for healthcare growth internationally, especially in Europe, where we have more socialized healthcare systems that need technology to be able to optimize them if you don't have the free market, for Palantir. And that maybe is a 2, 3, 4, 5-year discussion, but that is one of those things as a shareholder. I mean, like, you really want them to be able to get this deal for the trajectory of the company. In November 2022, the UK's National Health Service announced a substantial investment in transforming data procurement exceeding £400 million by architecting an integrated data platform or a federated data platform. The NHS aspires to equip healthcare practitioners with actionable insights, streamline complex processes, and cultivate a culture of collaborative engagement. The NHS has wasted $10 billion over the past couple of decades on legacy IT infrastructure. Wait times, backlogs, they're super high, so there's obviously a massive need for them to be able to do this. Palantir leads as the main contract's front runner. The platform contract, worth over £360 million over 5 years with the possibility of 2 12-month extensions of another £120 million, finds Palantir's Foundry product as the front runner due to the company's prior engagement with the NHS and its leadership in rapidly implementable data integration solutions. This would be $611 million over 5 years, or I think over 7 years, if Palantir is able to get this contract. Additionally, Palantir already carries out some of the work envisioned in the data platform. They got a $31 million contract a month ago to be able to transfer some of the data from legacy platforms into the new FTP. That doesn't mean Palantir is getting the deal, but if you're using the company to be able to transfer data into the new FTP, one could imagine the new FTP is also managed by Palantir, right? Just tinfoil hat theory, I guess. However, the company faces off against a lineup of UK companies such as Britain's Quantexa and a member of UK's consortium. The NHS has already rejected the bid from Vorer Health Technologies, Eclipse, and Blackpear. These firms assert they can deliver the system at a lower cost, ensuring patient data protection. They argue that Palantir's secretive nature and close ties to the US security agencies could potentially affect Palantir's confidentiality, and that's one of the biggest headwinds they're facing in terms of propaganda. On the other hand, the smaller contracts seem to position other companies favorably, as Palantir would not be able to bid for the privacy technology or the App Store marketplace. However, it is not clear if the company could compete for the training, implementations, and deployment contract. And I think that signals either we're going to get a majority of the contract, and then other companies are going to get some of these other parts, and Palantir might be kind of like a marketplace for them, or Palantir gets the whole thing because Rishi Sunak, the PM of the UK, is just like, screw it, I want to transform the NHS, I don't care what Foxglove has to say, I'm giving the whole thing to Palantir. Now, Mariana does say Doctors Association concerns may affect Palantir's bid. The DA UK and other campaign groups have expressed concerns over Palantir's bid for the contract, urging the UK government to intervene and pause the process. The DA UK signals several risks associated with selecting Palantir, including the potential for nearly half of NHS patients to opt out of data sharing if a private company develops and runs the platform, which is obviously not good if you want to get integrated insights from all that data. You need the data to be able to do that. The opposition from doctors adds further controversy to Palantir's opportunity for the software infrastructure contract. So hopefully that is not something that stops us from getting the contract. I think it's a very real concern. And I've been saying over the past couple months that this propaganda can stop Palantir from getting this contract. But I'm hoping ultimately that's not the thing that hurts it. And then final part of the report, inclusion in the S&P 500 could result in lower stock volatility. If Palantir were to print another GAAP profitable quarter in 3Q, the company would be eligible to be in the S&P 500. In April 2023, the S&P Dow Jones Indices announced that companies with multi-class share structures would be eligible for inclusion. The index removed the multi-share restriction. Our analysis shows there is no significant re-rating associated with the inclusion on the S&P 500 because $18 itself is like a $42 billion company. So, that is a hefty price target already. However, we think that becoming a member of the S&P 500 could be highly beneficial to the stock volatility. We think that the inclusion would attract more institutional investors, both active and passive. And then we just have a bunch of other charts and some disclosures that are near the end of the report. So overall, what is my summary of this? Mariana feels very confident in AIP. She thinks that they have 300 customers in the pipeline. They have 100 already using the product. It is one of those products that is going to be massive. That is going to be a massive catalyst for growth and for the trajectory of where generative AI is going from an enterprise spend. This is Palantir's market to get. Palantir has to be able to get this market. International commercial revenues are bad, but that should be able to increase as Palantir is able to deal with some of the headwinds that are going on from a macro perspective. US commercial is amazing. Government, pretty amazing. I mean, to do $300 million in one quarter because some of these contracts we're getting is pretty phenomenal. We're expected to grow 16% by the end of the year. I don't think we're necessarily going to beat on those expectations. I think 2.185 billion is probably what we're going to get by the end of the year. If we're able to do that, and we're able to get the NHS contract, which the revenue for that will probably be recognized over the next couple of years, so I don't think it'll be recognized in 2023. We're able to get into the S&P 500 because we're going to continue to be GAAP profitable, and we're essentially able to grow our customer count, which to me is the only thing that matters, and I think that's why we're maintaining the $18 price target. Mariana is basically realizing, look, if these guys just monetize their existing customers and they're able to continue to grow their customer count, hopefully at a moderate 7 to 8% every quarter, which would be about 30 customers every single quarter, those customers adopting Foundry, adopting Apollo, and eventually adopting AIP is the land expand or the acquire, land expand, model for Palantir. Get the customer, land inside of them, integrate, become so sticky, become so useful that at the end of the day, they're like, you know what, screw it. We're going to end up paying for this stuff. And if you can get to that average of $3 million a customer, and that average can even go up a little bit because we don't know what AIP is worth. And that's why Mariana is saying, look, they don't have a pricing strategy. And even though some analysts might feel bad about that, we actually feel confident because if we're so correct and we're so confident about our thesis about generative AI and AIP helping companies, you should be able to come up with a pricing strategy that makes sense and that doesn't hurt margins. If anything, it should only help margins, which means if that's the case, if you can monetize these 400 customers you've got in the pipeline for AIP, and additionally, you're getting 30 customers every quarter and hopefully being able to monetize them. By 2024, you're in the S&P 500. Maybe you got this big NHS deal, which is going to have massive ramifications for healthcare all throughout Europe. Your healthcare revenue itself is growing 93% year over year. AI is the new tailwind for the entire economy, and Palantir is one of the key players in implementing AIP and LLMs within organizations. There is a reasonable thesis that $18 as a price target makes sense. And, the report goes through also some of the numbers on how they come up with those multiples and how they come up with the averages per customers to be able to justify that $18 price target. Usually price targets are 1 year out. We're at $15 right now, close to 18. Price targets are 1 year out. So I'd imagine by August 2024, Mariana has the stock at $18, which is a reasonable way to think of it. Dan Ives has it at $25. Overall, I like the report. I think it made a lot of sense. There's a lot of more numbers that are going to go into it. I'll probably do maybe another video or two going hyper specific into some of the parts of the report that I didn't get to talk about today. But I think the report made a lot of sense. And even though Palantir didn't grow a lot last quarter, to still be able to maintain the $18 price target to me is a good thing because they're seeing that there's something qualitative in the company that will result in the quantitative, empirical, numerical growth for the company, even if it's not happening right now. So that's it. Those are my thoughts. Let me know if you want it on Twitter. DM me. I will send you the report. I've sent out a bunch of them today. I'll send out a bunch more. And if you got to the end of this video, the comment you have to leave is water bottle. Boom. That's what we're doing. Water bottle. Somehow leave a comment with water bottle. Thank you all for being here. I appreciate it. It means the world that you watch these videos. And thank you for taking the time to check out the video today. I'll see you guys in the next one. And yeah, if you want the report, DM me on Twitter and I'll send it. Bye, everybody.